Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York on Thursday. Happy Aloha Thursday, as we say on the islands, 24th day of March, 2016, and this is the Daily Report for Gold and Silver, our weekend review, coming to you a day early in honor of Good Friday, in which markets will be closed. And of course, on the weekend review, we combine all of the markets together, trending markets as well as the gold forecast, to give you a much more broader scope and breadth of market activity this week. And we certainly saw a lot of it this week. Precious metals first, under dramatic pressure throughout the better part of the week. We'll look at gold and silver, but first to gold. As you can see, it's trading roughly off about $2.5, $3 on the day, 12.17 and change. The high has been 12.23, the low 12.12. So as you can see, not very much range on the day. So traders, it looks as though we are going to see about a $7 lower close in gold at 12.17. That is COMEX, currently just settling right now at 12.1690. We are looking at a daily chart, but on this daily chart, we really have our big picture. Our big picture looks at both the major, intermediate, and then the subcount behind the intermediate. Of course, major A, we believe that that concluded when we hit these bottoms here at about 1050. This, of course, began to occur at the end of last year and really took off at the beginning of this year. These are when we see these lows. Now, the way that we looked at it was that we had our large A, and then that large A was composed of 5 legs, so to speak, this being leg 3 here, intermediate 4, and then an intermediate 5. You can see our intermediate is in red. And after that, I believe we absolutely concluded the A wave. We have begun a major B. I believe that we entered our subcount 1 of the B wave, and that subcount 1 concluded at 1288. That's this top here, and I believe that now we are in a subcount 2. I believe the subcount 2 could take us anywhere between, call it 1205 and 1195. That is our target to actually go ahead and buy. Following this correction, we should see a very, very strong wave 3 moving us past $1,300 per ounce. So the chart that I have put up, it does have half-day candles, 2 candles per trading day. And in this chart, I do have that sub-count that is behind this one that we just spoke about that I believe was completed. And we are now in a wave 2. That is this A, B, and I believe we're in our final throes of C. As you can see, it really came up off these lows at about 1050. Wave 1, wave 2. An extended wave 3 was actually 261% in terms of the retracement or extension, from wave 1. Our compression triangle, which took us and completed a 4th wave, and then our final 5th wave took us up to these tops at 1287. Now from there we went into a corrective period, a wave 2. Wave 2 so far has been composed of an A. Our B came precisely to 75% that of A. My sense is that we will probably see some support come into this market, and we're going to go in and buy this market when it gets to approximately $1,200 per ounce. So traders, a quick look at silver. Silver under tremendous pressure this week. We can see that as we look at this weekly chart. Realize this, I've got one fib retracement from about 1850 down to these lows just below $14 per ounce. And when we do that, we get a 50% retracement area, and that comes in right at around just above $16. And as you can see, market comes down, makes these lows here at about 14, comes up, and you can see major resistance right in this area, a lot of downside pressure. Market comes back down and makes this lower low, 1369, and as it trades up, it once again finds this tremendous headwind right at around 1600, and we don't really see any support in silver until about 1481. After seeing the dollar fall from grace for about the last 3 weeks, we did see the dollar recover this week, closing up substantially on the week, nominally on the day. The dollar staged a pretty dynamic recovery this week. We still show support right now in the market at roughly 95.30, resistance at 96.40. All the markets are quiet today. Crude oil is trading off, but off about 0.5%, not really a dramatic change for oil. The key, though, is it is below $40 on the close at $39.59. When we look at a weekly chart, you can see that over these last 3 weeks, body size has been diminishing. This week, we've got almost a doji star, and I do believe that we have some resistance at about $40 per barrel. Of course, with the markets being closed tomorrow in honor of Good Friday, we did have quiet activity through the day. However, the one market that really had some volatility was the U.S. equities markets. Equities markets did close higher on the day, 17,515. When you take a look at the low, 17,399, you realize it's up 13. At one point was down 100. That also brought some pressure on the Standard & Poor's 500, which right now is going to close in essence unchanged on the day, 2028. Of course, we had stops just below 2020, call it 2019. And when we look at the low of the day, it was 2012. So we were stopped out on our long S&P 500 trade, but we were stopped out with a healthy profit. The Standard & Poor's E-mini contract today closing in essence unchanged at 2028. Did have a low of 2012. The high on the day 2029, so we're closing near the high. When we look at our single candlestick, and that's right here, you can see what a pure doji we have, open and close right at the same spot. We did get out of our trade today, and we got out as a stop was hit, and the good news is it was hit with a substantial amount of profits. We originally got into the market at 1979, so we got in right in this area, but as this market traded higher, of course, we went ahead and trailed our stops up. Now, we were stopped out just below 2020, so we were stopped out at 2019. We got in, as I said, at 1979, so we've got quite a nice profit. We'll have to take a look on Monday to see how this market holds. We absolutely detected some weakness over the last few days, and we also identified a three-river evening star. We talked about that on yesterday's show, but we also talked about the fact that you need to see a confirming candle. Now, the fact of the matter is we would have only gotten confirmation of this pattern if we would have closed on the lows of the day, but the fact that we had such a resilient recovery really negated the confirmation of a potential sell signal in the Standard & Poor's. We have seen tragedy once again this week in Europe, and as I said a couple of days ago, our hearts and prayers go out to all of those affected in Brussels. As we go into an extended 3-day weekend, I want to wish you and your family a great 3-day weekend, health, happiness, prosperity. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for another daily update and review.